Drawdowns. This is a topic that came to me from Instagram, from the Instagram lives that we do. I asked everybody, I polled them last week about what types of topics that they would like to talk about, and this is the one that came back. Actually, it was titled How to Cope with Drawdowns, and I thought that dealing with drawdowns would be a little bit better. Coping tends to imply that like we're trying to just like kind of sit there and hope that the drawdown goes away, and we're just gonna grit our teeth and bear this thing. And I think that that's the wrong approach, right? Because if that's the mindset, then that's something that is implying that it's unexpected, right? That we're just going to try to muddle through, because if it is expected, then even though we might not necessarily enjoy it, it's part of the system. It's something that's, it just is. All right. So a lot of what we're going to talk today about has to do with expectancy, and let's just dive right into it. So dealing with drawdowns. First thing that we would want to do when dealing with drawdowns is to understand what to expect. Right. So this is a spreadsheet that one of the Mara coaches, Coach Stu Chalmers, put this together. He put this together last year. We did a whole big presentation about it to our members. But I'll give you the gist of it here, and hopefully it helps you out some. So when we're thinking about drawdowns and we're thinking about losing streaks, right? And given the current market environment, how the market it's basically hit bear market territory or close to it, or many growth stocks have been in bear market mode, right? Like so here, for example, this is the Russell 2000. Hit bear market territory, 21% off the high. Anything greater than 20% is considered a bear market. So it's there. Most growth stocks, right? So here's the IBD 50, and the IBD 50 had a drawdown of over 30% from peak down to the bottom over here. A little bit of a rally so far this week. What's more, so you could take a look at something like ARC, and then this is fairly representative of what people are experiencing. Right, so ARC off the top has been in a bear market decline over 60, close to 60%. Right, so how do we avoid this? And if you're feeling this, well, how do you cope with it? I guess that might be where the topic initially stemmed from. So a better way to think about it, I feel, is to understand your math, understand your streaks, understand your systems, and then you'll be in a much better position to deal with drawdowns. Ryan, this is the one that Ryan requested. All right, Ryan. So perfect. I'm glad that you're here. All right, Ryan. So the first thing that we'd want to consider, right, is well, since you're here, do you know what your strike rate is or what your batting average is? Um, how many trades do you? What's your win rate? Uh, do you know that? If you don't have that, then the first thing that you would want to do is focus on getting that number, right? So that way we can start to figure out, well, what is a reasonable winning streak or a losing streak for you, and that'll help you figure out, well, what is uh, a typical drawdown like for my trading? Like, what should I expect? So much of coping with something like a drawdown is setting the expectation. If you have a proper expectation and your expectations are being met, then there's nothing to cope with. But it's when our we have a certain expectation and those expectations are not being met, that's when we're trying to figure out, like, oh well, how do we cope with something? The best way to cope is by getting the actual data. So if you know your batting average, uh, type it into the chat. Let me know. There is no good or bad batting average. You might say, like, well, isn't a 90% batting average great? Well, not necessarily. I like so. So here's an example, right? So let's just say that your batting average is 90%, and on each trade you win $1, right? 90% batting average. You get 9 wins in a row. You made $9. Great. But what happens if on that 10th trade you lose, on every loser, you lose $10, right? That's a losing system. You won 9 in a row, 90% win rate, but on your loser, you had this huge loss, and now you're sitting at a $1 loss, right? So you can have a high batting average, but it be a losing system. So I've seen like my batting average, right? My batting average is 40, about 45%. Let me come back over to the screen share and come over to this. Yeah, my batting average, right? 45.5%. Let me make this a bit bigger so you guys can see it. So my winning percentage, 45.5%. Great. So if I were to take that and come back over to this spreadsheet here, and I'm trying to figure out, well, what's the likely losing streak that I can expect with a 45% batting average? Well, somewhere in here, right? Like about four. So over any 10 trades, I should expect to see up to four losers in a row, right? I can have four losers in any 10 trade losing streak, but it's possible that I might have four losing trades in a row over any set of 10 trades, and that's perfectly normal. It's when I start to have more than four. If I have five, then that would be a sign that, hey, something is off with the system and I should be scaling down. Yes, Ryan. So if you don't have that number, then your first step is going to be to start to find out, well, what is your batting average? You'd want to set up, or you may want to set up a spreadsheet similar to what I have here, right? So I have every single trade that I've taken in this spreadsheet from last year, right? So I started this spreadsheet last year. I'm carrying it forward to this year. You can tell that I've added some rows and things through it as the year progressed. But this is what you're going to want to do. Set up a spreadsheet similar to this, and maybe you have some of the headings that I have. Maybe you don't care about those. If you decide to come over and join the elite program, let's say, then you get access to this, right? Like this is something that all the elite members get, not just the mm, the trades that I'm taking and the plans and all that, but the actual spreadsheet, and you could use this as a template for yourself. Um, but what you would want to do is have all your trades, the date that you took them, your entry and your exit price, right? So at least your entry price, at least the date that you closed it, and the average closing price. And then from there, you're going to be able to see, well, did I win on this trade? Did I lose on this trade? And you'll be able to start to say, okay, um, what's my batting average? And that's how you'd be able to come up with how many trades you took, the number of winning trades, the number of losing trades, and come up with your percentage. These statistics are crucial. They're absolutely crucial if you want to make trading a serious thing. If you don't know what your batting average is, then yeah, then it's uh, before I knew what my batting average was, like I remember before I started doing all this kind of stuff, right? Before I started to get into spreadsheets and try to figure out these stats, and I understand too that stuff like this looks intimidating, right? Like you look at a formula like this, and it's just like, oh my god, now what the hell is this? Are we back in high school calculus, or what is this stuff? No, that it's natural log formula. But the formula itself is straightforward enough to where the main thing to understand is, okay, if I have 10 trades and this is my batting average, my strike rate, whatever you want to call it, then this is the streak that I could expect. So go out to 100 trades, and within 100 trades, there'll be some streak, right? Like I've experienced a losing streak of 8 losses in a row, right? And you might say, like, damn, that's a lot. Well, like, that's normal given my batting average, right? And so the key to winning and trading isn't what your batting average has to be. It's also, are your winners bigger than your losers? My average winner is about 1.85 R, right? Or about 19.5%. My average losing trade, I lose less than 1 R, right? So about 0.75, and I'm losing about 5%. Well, that kind of math works out. That kind of math last year produced 75% for me. That's okay. Well, so Ryan, is 60% an unrealistic target for? So are you saying an unrealistic batting average? Is that what you mean? If you're talking about batting average, I wouldn't say that it's unrealistic, but the idea should be to not to try to say that, oh, like, I want to win on every trade, right? Like, well, what we want to try to do is trade our system flawlessly, right? So that way we're focusing on the process, not on individual outcomes. So for example, my process uh, has to do with screening and filtering for trade ideas. I come up with trade ideas each week, each day, and then from there, right? So I'm starting out with this list here, about 300 stocks on it. Then I'm filtering that list down into ideas that are setting up, and then I'm taking this list and I'm breaking it down into stocks that I feel are close or that are in the neighborhood, and then ideas that could be actionable, right? That are setting up in strong patterns that are close to being buyable. And then from there, I have a process to figure out, well, what is it that makes a quote unquote high probability setup? And I'll go through each one and I'll do that kind of analysis. And it's from there that I make a decision of, is this a trade worth taking or not? Right? So all of it has to do with following the same process and trying to knowing what a winning trade looks like, and then executing that over and over and over again. And if I find a whole bunch of them, then I'm executing on a whole bunch of them. If I'm not finding any, then that means that I'm not executing any. Ryan, So yes, on average, I am led to believe that 40% is efficient to be consistently profitable. Yeah, you could have. So again, my batting average is 45%. Stu's average is 42%. Both of us returned 75% last year. And the key to it for his system, for my system, is having winners be dramatically larger than your losses, right? Part of the way of doing that is by cutting the losses real short. A lot of people will let their losses compound, right? Here's an example. Right? Let's take a look at crypto. Right? So come over here, look at some crypto, and you might say that, oh, look at this, Bitcoin. Bitcoin's rallying. Right? Bitcoin is up 3% today. Over the past 3 days here, Bitcoin has rallied 15%. Right? Seems good. But yeah, it's rallying 15% after dropping over 50%, right? Like that's not good. So in order for Bitcoin to get back to its high from down here, it's got to rally 100%, right? Maybe it does, but it's in a steep ass decline. It has a lot of overhead supply built into this. So it's not easy, and you're much better off keeping your losses small, because how often do you come across a 100% winner, right? If you have a 5% drawdown, right? So let's say, just need a drink of water here. Let's just say, sake of argument, you got in over here and you had your stop loss right there, right? So in this example, you bought Bitcoin at, what is that, 63, and you set a stop right below this potential support level at about 60, right? So about 4%. Great. So all you need to break even from this is a rally of about 4%, right? A little about 4.5%. It's a lot easier for you to get 4.5% than it is to get 100%. That's where the math starts working for you, right? When you cut losses short. If you let your losses run, then the math is working against you, because to get back from a 50% drawdown, you need a 100% gain just to get back to even. So after how many straight losses do you stop and get away from the charts? So if uh, let's look at the stats, right? So uh, my batting average about 45%. So over any 10 trades, if I have more than 5 losses in a row, then that means that on, so 4 losses is okay, that's acceptable. That fifth loss, okay, something's up here and I need to step back and reassess it. It's rare that I have 5 losses in a row. And this table here too, the assumption is that you are executing your system flawlessly, right? Like you're not taking the random trade here, the random trade there, because then that's going to start to skew your numbers too. You could look at your batting average, but if your batting average is like, okay, there's a swing trade over here, there's a day trade over here, there's a long-term trade, and you have everything kind of commingled and not parsed out with any kind of rhyme or reason like that. It's those kind of things that makes traders out like want to tear their hair out, right? And I know, because I've been there too. It's, I would say that the most first, start to set up something like this. start to set up something where you are tracking your trades, tracking them in a spreadsheet, and maybe part of the decision too is, are you how serious about trading? All right, like how much do you want this to work? If you do want trading to work over the next uh, not just this year, but over the next 5 years, 10 years, until for the rest of your life, then this is the kind of work that you need to be doing. It doesn't matter if you're a fundamental guy, a technical guy, day trader, swing trader, whatever. We all need to know our statistics, and it's from this kind of stuff that we can begin to set our expectations. Now, here's another spreadsheet, right? So with this is telling us that with whatever your win rate is, this is what you can expect if you have 5 trades, right? Like you could have 3 losses in there. If you have 9 trades, you could have 4 losses in there. If you have 17 trades, you could have 5 losses in a row. 29 trades, etc. Right? Like you get the idea. So as the number of trades that you have expands, you are likely to get some losing streaks in there. And again, like if you know your stats, then it's just part of the game. And it doesn't mean too that you're just closing your eyes and you're flipping a coin and that's it. Like there's other ways that we can improve our batting averages too, right? That we can improve our analysis. We could improve our analysis of trades, of markets. We can improve our sizing strategies, right? How we now look at our trades. Here's another example of how we can start to figure out and glean some really great stats for ourselves. So a study that I started to do is this here, right? So you see these columns up here, the high watermark in dollars, low watermark in dollars, high watermark in percentage, and high watermark in terms of R, and same thing for low watermarks. You see that? So the purpose of having this is like it helps me figure out, well, how far do my winners run and how far do my losers drop? And of course, like because I'm cutting my losses short, the worst that the lowest low watermark on any trade is going to be 1R. And so to just to normalize, talk in terms of R, the lowest that it's going to be for any trade is going to be 1R. However, when I'm looking at, well, on my winning trades, what is the low watermark? Then that's something that can help me tighten up my stops. On the high watermark, something that it's been able to teach me is that my average winning trades tend to get beyond 2 times my risk. And like that's a really great piece of data to know, knowing like how far your winners tend to go. In terms of R, my winning trades tend to go more than 2. So what does that mean? That means that I should be taking off the and getting some profits and locking in profits not at 1R, but at 2R, because the majority of trades are getting to 2R and way beyond. So from a psychological perspective, personally, right? Like now I'm talking about my own psychology. I like to lock in just a little something at 1R. Like it makes me feel good. So what I've been doing, or what I was doing before, was I was taking a third off at 1 times my risk. But after doing this study, now I know that I could take off far less. I could take off nothing and come out ahead, come out further ahead. I could take off start taking off at 2R and be good. But well, what I'm going to do is I've been taking off just a little tiny bit at 1R, so like 10%, a nominal thing, but it gives me that psychological edge. And then when I get to 2R, then I'm taking off the half and then letting the remaining half run. And that's been great so far. That kind of knowledge comes from tracking statistics like this. And it's something that anybody could do. Like I'm not a big math guy, right? But I taught myself how to do this kind of stuff, and now I'm helping other people do the same. So can you do this kind of stuff? Absolutely. And if you want help, that's what the elite program is for. Any other questions? Got into quite a bit in a hurry on this one. Well, with dealing with drawdowns. But well, when I'm looking at this, when I'm looking at the potential drawdowns, potential losing streaks, it's good data to know, and the more that we uh, know the system that we're trading, the more that we are focused on executing that system, then it uh, it makes it a lot easier to deal with this stuff. But like if we're unsure of our system, like if we're just trying to be right on every trade, right? Like if we're judging ourselves based on each trade, like oh no, this is what I used to do too, right? I used to judge myself on each trade, and the only stat that I was tracking was my profit and loss, right? So pretty much with each tick or whenever I would go and check my account, that would be like, oh, like I'm up today. Oh, I'm down today. And like that is not like that's a recipe for a disaster, and that's something that I learned the hard way too. What we want to be doing is looking at the aggregate. We want to have a system and having a system means that we're executing the same kind of thing over and over and over again. We're doing the same kind of analysis over again, where that for markets and for trades. So we know the proper conditions when our system works best. Right now, though, with the market doing this, right, I'll zoom back over here, and the market's in pulling back as it is over here, right? Like here's the Nasdaq. If I'm trying to trade a bullish system in this environment, guess what? I'm going to have my head handed to me. So for the most part, I'm sitting in cash. I'm sitting in cash and I'm waiting for trades to develop, and that's okay. You can trade less and still come out way ahead. The idea is for you to trade your systems when the odds are stacked in your favor. So you want to have some kind of a mechanism that will tell you when are the odds stacked in your favor. And yeah, if you need help with that too, that's another thing that we teach and share every day in the Marily program. So, any other questions? Any other questions about uh, drawdowns? Any other questions about streaks, winning streaks, losing streaks? Um, any questions at all? Type them into the chat. We'll do a little bit of open Q&A. See a bunch of people over here on ShareVision too. Good afternoon, everybody. Yeah, you guys over on ShareVision, let me know that you're over there. Let me know that you're alive. I see a whole bunch of you. Somebody type into the chat. The chat over there has been kind of quiet, but appreciate you guys. over here on YouTube and on Facebook too. Let me know what other questions do you guys have. I'll stay on here for another minute or two, and provided you guys have questions. If you don't have any questions, then we'll call it a wrap. But let me know what questions you guys have. I'll just take a drink of water here too. Yeah, more stats. I'm starting to track my daily water intake. According to this app that I downloaded, I should be drinking about 86 ounces of water per day. Definitely was not doing that, so I'm looking forward to seeing the results of increasing the water intake. But yeah, it doesn't look like you guys have any other questions, so wrap things up here. I want to say thank you all so much for being here today. Really great topic. Let me know what other topics you guys are interested in. Comment, throw it into the comments. Throw it into the comments later on too if you are watching the. Oh, here's a question from Ryan. Ryan, longest winning streak, no more sad drawdowns. My biggest winning streak. So last year I had about 15 trades in a row in October that were winning trades between October and November. So if I come over to this and I try to figure out, well, what's the likelihood of that kind of a streak, then let's see. I'm getting into the like that's like a 1 in 2,000 kind of thing, right? So again, just based off of the math and my batting average about 45%. So yeah, it's getting into the thousands to have 15 winners in a row. But these kind of things happen, and especially when you are focusing on your process, focusing on, well, when is the best time for me to trade? Well, what's the market analysis? What other factors are there? For me, it's filtering based on fundamentals, then looking for a specific technical criteria. Again, all stuff that we teach inside the elite program. I try to share some of it here with you guys, but it's tough to share everything in a limited time span. But we have a full library, full trading library, all these lessons archived. You have access to all that. And we have a private Discord channel, so that way you could hop on there and ask questions whenever you want. But we are over time, so we'll wrap this up here. Again, I appreciate you guys. Join us tomorrow. Tomorrow we will be interviewing Adam Sarhan and talking all about his new book, Psychological Analysis: How to Make Money, Outsmart the Market, and Join the Smart Money Circle. You can see all the notes that I made in this book. Absolutely fantastic book. Can't recommend it enough. And I hope to see you guys tomorrow during that interview. Till then, take care. Much love. Peace out.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.